Hello traders, Day Trader Matt here with a businesswithtrading.com doing a trading strategy recap for Friday the 13th of February. And today was an interesting day. It was definitely your typical Friday where it just chopped around mercilessly. And it's also a good lesson. We had two trades today and ended up with 0 points. And it just is a good lesson because day trading is difficult. It doesn't matter what people tell you, and risk is really the name of the game. I've seen people, risk 3 points to make 5 ticks and, different stuff like that. I could talk about stuff like that for a little while. But just stuff like that kind of proves your point. You don't always get a really good favorable risk reward ratio, which would be a 2 to 1 reward to risk, 2 to 1 or more. You don't always get that in day trading. And one of the big reasons is after, that I've seen, after you enter a position, the market kind of starts to change a little bit. And I want to talk about that a little bit here. I said we took two trades today, 0 points. Our first trade, you know, um, didn't really turn out well at all. We ended up shorting at 7.5. The market was chopping around here. It came up. We did get short. It looked like it was a decent setup, but we got stopped out on that one. So we watched the market a little bit. Trying to get a feel for what is actually going on. Price came down, back up, and as it started coming down, we got short again right here. I was looking to be short. I wanted to be short. It looked like there was a little bullishness, especially when it supported here. But I didn't really like the structure. I was looking at different stuff, and to me, I was looking short. So the market did come down here, nice selling, and then some choppiness. And as price started to break this 80 even level here, it definitely started to get a little choppy. And when this bought back up here, it was telling me, it's ugly. You don't want to be short. And I didn't really feel like being long either, so it was just one of those things. Get out of the market. You know, Making 0 points is not that bad. We will be able to pick it back up next week and go from there. And that's really what trading's about. Is being able to know when it's not working out. And instead of being down 4 points or 6 points from being pig-headed, it's better just to cut your losses. Be like, well, I'm down not a couple dollars in commission. We'll go to the weekend and then pick it back up next week. Next week's a shortened week because of a holiday. But it should be a pretty good week. The price ended very interestingly today. So it should be a lot of fun. You know, but I really just wanted to talk about risk for a little bit. Talk about day trading. People always ask me, well, I'm looking to accomplish such and such goals. You know, I want to join the day trading room. Well, it might not be the best avenue to go down. I've talked with people, and we, that's usually what I do. I talk with potential clients and find out is day trading really right for them. They just want to do it. Maybe they would be better off swing trading or doing options or something, or maybe they just won't become a good trader. Most people that care enough to call and say I want to learn what's the best route. The majority of people have the ability to become a trader, which anybody has. It's just, are you able to get out of your comfort zone and learn things, which everyone's capable of, but there are a few select people that just won't do it even though they say they will. It is what it is. But wanted to highlight that it's risk is definitely an important factor in any trading, whether you're day trading, swing trading, option trading. And I'm a big believer. If you can trade one market, you can trade any market. If somebody says they can trade one market but they can't trade another market, eh, might not really feel that good about them, because in when you break it down, every market is the same. Some might move a little faster than others, and some move a little slower than others, but everything's the same. So I find it interesting. But anyway, I want to talk about that. Also, I want to highlight an options trade that we took off this week. It was LinkedIn. What we did in this one, we played it a little bit different because I think earnings happened somewhere around here and then prices gapped up. We sold some credit put spreads down, below the market, right here actually, right about here. We sold some put spreads below the market. Price obviously came down a little bit, so we could have gotten I think 30 more cents out of them, and then price started rocking up and it just took off. So we ended up exiting yesterday for we sold them for 71 cents, bought them back for 6 cents. It's not a bad trade from January 23rd, which was right here, until yesterday, which was the 12th of February. So I wanted to highlight that. I don't really talk about that many option trades. I've had some comments, will I highlight a few option trades, because I talk about the day trading room every day and talk about futures. And one trade that I actually did highlight the other day and was soybeans. Soybeans, we were long down here in our futures swing trade group. We've been slowly moving our stop up. Right now it's 982, and we're trying to get above 1,000. So that's what we're looking at here. If the market can get above 1,000, if we get stopped out at 982, I mean, that's a pretty decent profit. But that's what I'm looking at to next week. We talked about this a few videos ago, and it's just something good to highlight. That's what trading's about, is being able to follow your rules. If it's working out, great. If it's not working out, like today, for example, it wasn't really, well, it was looking like it wasn't working out. In real time, you can't really say, it's going to go against me back to my entry point. It's difficult to really say that in real time. You can just, theorize that. But until it actually does, and after it does, it's kind of too late at that point. So you get out and then reassess things. And in my time and my screen time of trading and my past trades, that works for me. And that's one thing that I do go over with course members and coaching clients all the time, is how to read the markets. If it's not working in your favor, just get out. You can always re-enter. So that's one thing that I talk about a lot when I coach students and course members and stuff like that. I think it's one of the most important parts of trading, is managing your risk. That's important in all of life, but definitely in trading. Like when I drive, for example, like I'm going, driving a couple hours to my brother's house or something like that. I'm always aware of traffic. Who's beside me, who's in front of me. It seems like a lot of times, because where I live, the drivers aren't really that great. We do have some pretty bad drivers here. I've heard that from different areas, and people have told me things, but it seems like every other month or every other week, depending on what area I'm driving in, somebody's going to pull out in front of me. So I try to drive defensively. I try to know who's beside me. So if someone does pull out in front of me, I can get over. A couple months ago, I was driving. It's a 2-lane highway off the interstate. It goes off the interstate and then connects to another road. But as it comes off the interstate, it does a couple turns, and it probably lasts for about a mile and a half or something like that. And all of a sudden, traffic just stops dead. I don't know why. I have no idea. Once I got up to the front of the line, there was nothing up there, so I have no idea what was going on. And there's no way I can stop, so I just pull off in the grass and then slow down. Slow down as I'm driving in the grass. And as I'm slowing down, I passed about four cars, something like that. And after I slowed down, that the traffic started moving again, and I didn't expect it. But the last car that I passed actually let me over. He stopped so I could get over. Well, he was already stopped, but he just motioned go and get over. So I got over, and that's how I got to see the front of the line, and there was nothing there. But that's a good example of trading, because you don't always know what's going to happen, but you need to be prepared just in case something happens. If I wasn't paying attention, I probably would have just hit the guy in front of me. But I knew enough. I can't stop. There's no way I can stop. Let me get off in the grass median, and then I can slow down there. That way, I don't get hurt. My car doesn't get hurt, nor do the person in front of me. Because if I hit him, I'm pretty sure that the next 3 cars would have just, went right into each other. Because everybody was stopped and there was only like a foot between each car or something like that. So usually it causes a ricochet effect. So anyway, hopefully that example kind of brings home what I was talking about as far as risk in trading. You can always leave comments below the video. Thanks for watching. Have a great rest of your night. Have an awesome weekend. And I'll see you back here next week in the markets. Thank you.